Welcome back, everyone. We hope you enjoyed your networking opportunities in the lounge area today. You'll have a couple of opportunities to meet those folks you haven't had a chance to meet. My name is Cindy Mirzon, your Sources of Capital Community Panel moderator this afternoon, the director of the Cal Coastal Development Center, which provides fee business advising and to entrepreneurs and business owners in Monterey and San Benito County. That we'd like to thank the sponsor for this session, which is California Coastal Rural Development Corporation, as a small business lender who happens to host the Small Business Development Center. Community businesses provide the backbone of our quality of life. The restaurants we visit, the stores we shop, the smaller brands that we buy, but getting funding to start a community business can be very challenging. This session will address the surprising variety of sources of funding for community businesses, many of which are new and emerging, and how you might be able to access those. We have a great group of panelists for this discussion. Let's welcome them to the stage. Jeff Dion from WeFunder, Hillary Talbot of Sale Community Capital, and Trevor Parham from Oakland Black Business Fund. You can find out more about the great work that each of them has done on the expo page for this Startup and Investment Community Capital Monterey site in the Expo Hall section. So for this session, each of the panelists will have 2 minutes to introduce themselves, including their role in the community capital arena. I'd like for them to identify their organization's focus, whether it's investor, entrepreneur, or both. And once you've gotten an overview from each panelist, then I will ask them some questions to generate some discussion around funding options for entrepreneurs and the ease of access to those options. So we have some great experts, and I think you're going to really enjoy hearing from them today. So there are a number of ways that you can participate in this session. You can send them some love during the presentation using the emojis at the bottom of your screen. You can send a general comment that everyone can see about the presentation in the chat section, and we'll try to respond to the questions if we have time, if you leave them in the chat. And you can visit the panelists and the sponsors in the social lounge rooms during the break. So I encourage you to interact with us if that's something you'd like to do. So let's start with the panelists' introductions, including their expertise and focus areas. Jeff from WeFunder, could we start with you?
Hi, yes, so I'm Jeff from WeFunder. We actually just heard from somebody raising WeFunder a minute ago, which was kind of cool. We are an equity crowdfunding platform. So we're a platform in which businesses can raise capital for their startup or their already functioning business through both equity deals and also through revenue shares as well. I am on what you might consider the business development team here. And so it's sort of the first line of humans talking to folks to make sure it's a good path for them at WeFunder.
Great, thanks, Jeff. Hillary, how about you?
Hi, my name's Hillary, and I'm from Sale Community Capital and Crowdfunding, and I help entrepreneurs prepare for funding, tell their story, and then market their crowdfunding offering on a variety of platforms. And then I'm also working at the community level, developing a coalition. Hi. Can you hear me?
You're freezing up a little bit. I'm gonna move on to Trevor, and then maybe Hillary, if in the lower right-hand corner of your screen there's a little HD button. If you click on that, you can click LD, and it might make it easier for connection.
Okay, can you hear me now?
Yes, and we can see you too. Yes.
Okay, I'm sorry. Okay, one thing that needs major investment is our local infrastructure and internet. Anyway, I'm in downtown Santa Cruz. It's a miracle. It's just amazing to me that we don't have great internet here. So anyway, my name is Hillary from Sale Community Capital, and I help companies prepare for offerings, tell their stories, and then market their offerings on crowdfunding websites such as WeFunder. I talk to Jeff often. As well as I'm developing a coalition of community investors willing to look at deals that are both local and regional for startups as well as small businesses.
Excellent. Thank you, Hillary. Trevor, could you tell us a little bit about you?
Sure. Hi, my name is Trevor Parham. I'm the co-founder of the Oakland Black Business Fund, and we focus on providing Black businesses in Oakland with capital and growth strategy as well as technical assistance. And one of the most interesting things about our model is we focused on creating a peer-to-peer technical assistance model by which we fund the services provided by other Black businesses in the community to Black businesses in need. And so the great thing about that model is it essentially keeps the dollar in circulation within our community here, while at the same time creating resilient networks of other local Black businesses who then can continue on with other B2B relationships that will strengthen their businesses, on an ongoing basis. And the overall goal of what we aim for with that model is to then work through these technical assistance offerings to then position these businesses to procure additional capital from other larger sources of capital, whether it be things like a WeFunder or other more traditional forms of institutional capital.
Very cool. Thank you for sharing that. I hadn't heard about your organization before, so that's cool. Thank you. All right, so let's jump right in with the broad question. And for people who are sitting out in the audience and maybe have never heard of the comment community capital, any one of you can answer this question, or all three of you can, is what is community capital? How is it different from the other sources of funding that may have been discussed today? Dive right in. Go ahead, Hillary.
So community capital refers to either investment or a philanthropic investment with no expectation of being repaid into your community. So it's well documented that communities that have strong community capital networks actually are more resistant to economic recession. They're better at creating community jobs. When you have community investment, you're investing in those businesses that are going to create a larger or broader tax base for your community. So what I encourage my coalition to do is think about moving just 1% of their portfolio from Wall Street to Main Street. And if we can do that, we can change the world.
I see some head nods. Trevor, you want to add to that?
Sure. Yeah. So, I think of two different things, and sort of building on what Hillary said. One is I think about community banks, and those are structured different than other types of banks that we see out there. Maybe those banks are more so tied to Wall Street, but community banks typically are looking at both being a sort of standard retail banker for local businesses to have their deposit accounts with, such that then the bank is using those funds to do other things with the community. But then the other piece of that is then those banks are also lending directly to the community as well, and focused on the way that they use their capital. I think most folks in the room know, but a lot of banks, they don't just simply hold individuals' money and then also invest back into other businesses, but they also then invest their capital into other portfolios, which sometimes are maybe not necessarily geared towards the benefit of the local community. So typically a community bank is going to also then focus on all of their sort of asset management being focused on things that are going to also then benefit the community, and most importantly, things that are not going to harm the community. So I think that's one thing that I think about when I think of community capital. The other thing I would think about is more so this idea, again, sort of what Hillary was talking about, is providing capital infusion into businesses in ways that isn't necessarily focused on receiving an immediate financial return. Sometimes it's more so focused on how that capital is just going to improve the fabric of the community overall. And again, that's a lot of the work that we've done through Oakland Black Business Fund is we are providing businesses with business grants because we feel that the return is expressed as the impact that it creates on creating a more resilient economic community for the businesses that are here in Oakland. Whereas a lot of other groups that function similarly to the way that we do are focused on lending to the community, which is still useful as well, but then they're focused on a regenerative structure that's going to provide capital back into the lending entity to then make more loans back to other businesses. And while we understand that approach, we essentially leverage our impact as a form of then regenerating more capital from other people who essentially are donating to our fund because we are set up as a nonprofit. So I think that the overall idea when we look at community capital is the capitalism side of it is more so focused on how can you create positive impacts for the community than understanding that what's good for the community is good for the world.
Great. Thank you, Trevor. Jeff, do you want to add anything?
I'll let us move on to some deeper questions, but I'll just wrap it up into saying that, because I think both Hillary and Trevor kind of hit on all of the, I think, the important points, but to me, it's the one thing that we can all agree on, whether you want to return, you don't want to return, it's philanthropic, it's nonprofit, is that it's very clear, both from data and just your gut understanding, that the more capital that a community can keep within its community, the better off that community is, right? So community capital is just about keeping your capital within your own community, whatever form that shapes.
Thanks. You all said it very well. It kind of leads into my next question, which is why is community capital needed, and where does it fit into an entrepreneur's overall funding strategy? Why would they go for community capital versus other funding options? Hillary? Go ahead.
I'll start again. And I'm sorry, is there a way to do this that you don't have to wave? So I've been actually talking a lot about this with Doug Erickson from Santa Cruz Works of, okay, what does community capital really mean? Is it just funding your local butcher, your local daycare center, or is it also funding startups? And I would encourage people to think about it as both, because really a startup can create new jobs as well as your traditional community capital investment. Again, the butcher, the baker also can create those jobs. Think of investing in Joby, for example. Look at how many local jobs there are coming out of that. And so that's the number one piece of it. And then number two, when you look at beyond the local potential job creation, okay, can you hear me? We should be growing these at home. Imagine being able to fund seed rounds from Santa Cruz or from Monterey or from this area versus angels across the country. It just is the model makes sense to fund at home versus looking all over the country.
Okay.
I can play on that point at the end. There is there's two ways, where I think it plays in. It's really important. You have the entrepreneur side and you have the investor side too, right? And so from the entrepreneur side, if I were an entrepreneur and I was starting a business, whether that was the local coffee shop or whether it was a SaaS startup that's going to have a worldwide reach or something. If I were looking for a new hire right off the bat, who would I want to go to first, right? I mean, easiest thing and smartest thing to do is go to somebody in your community, right? And if you have, a group of what we like to call it, we fund brand ambassadors surrounding your business, that you can then use as leverage points to help you move the business forward. That's a massive boost that you're going to get that you're not going to get from, a random, non-emotionally tied, community tied investor, in 3,000 miles away or something, right? Mm-hmm. The other thing I like to think about too is from an investor standpoint, if I'm a community member and I'm putting money into, a startup, if I'm the startup and I go and sell, the company someday, whether that's a local company that's just, selling to their employees or moving on and selling to, somebody else who's taking over the business, or whether I'm a SaaS company that's going public or, or selling, getting bought by some, Salesforce or something. Who do we want participating in that financial outcome, right? I mean, we want the community that business is in participating in the upside of that company, not somebody in San Diego if the company's here in Charlottesville, for example.
It's sort of the shop local concept from a finance perspective, right? I mean, so it's really supporting your local community. Great thought. And that's really an incentive for, I mean, my next question is, what about investors? Why would they want to invest through this avenue? And it's really people who want to support and see the local community grow, right? So if you were a founder, how do you find local community capital investors? Where do you go? The obvious person to ask is you.
I actually would point that finger at the other two first.
All right, other two. Trevor, we haven't had much from you. Could you share yours?
Yeah, sure. So I mean, if you're looking for capital from a non-traditional source, where would you go? Well, I think there's a couple different ways to look at that. And one of the things that we often see in business and startups is that there's this concept of the friends and family round of funding. And part of that is that there's certain people in our communities that don't have that access to the friends and family that have that kind of capital. So that's, I think, the first thing to sort of dispel when we're looking at the ways that people find the financing is that not everybody's going to have friends and family capital. Mm-hmm. So with that, then there are questions on where do you go? And I think that you can look towards crowdfunding platforms like WeFunder, and I think that's a great option, especially if you're starting out with a new concept and you're just looking to bring in capital in that way. But then there also are a number of groups, again, like ours, but also I feel like there's plenty of other groups besides Oakland Black Business Fund in other cities that are focused on supporting businesses with the first initial amount of capital. And it ranges, frankly, from how effective those are, how meaningful they are. But there's other platforms, for instance, a platform called Kiva that people have used as well in the past. And, regardless of the effectiveness of that, I think the concept is that sometimes you need to get just a little bit of capital to come in so that then you can leverage that to get more. And I think that what we see as the sort of common catch-22 is that, you can't get money until you have money. And so there's organizations out there that may not necessarily fulfill your entire capital stack for trying to get your business going. But they're geared towards being able to give those businesses, honestly, it's typically somewhere in the range of their first $5,000. But then you can at least sort of put that on your capital raise resume, so to speak, and then take that to someone else to say that now you've been able to get that other capital. But it is a tricky thing, and frankly, for myself as an entrepreneur starting my other business, Oakstop, when I started that, I didn't have any sources of capital, and so I just had to self-fund and get to a point where I generated enough revenue and enough traction in my market that then people were actually able to see that, what we were doing is something that would actually be worthy of capital. And quite frankly, by the time we did that, we didn't really need it. So, I think that that's another catch-22 as well. So I think that that's a big part of it is understanding where the resources are that are specifically addressing that catch-22 that exists.
Hillary, that's a great segue into what you do. I mean, you know where the local resources are and have been able to connect people to that. Can you talk a little bit more about local community capital resources?
Sure. So here on the Central Coast, that's starting out. Santa Cruz, Doug Erickson and I from Santa Cruz Works, we started a community speed investing event to think of it as the Tinder of investing. And it connects investors with those raising capital through primarily regulation crowdfunding, so everyone can invest. So to kind of back up one step, so first as the entrepreneur, I would, if it were me going out to, if you're a first time raising money, lean on organizations such as the SBDC, iiED with Brad, Santa Cruz Works, and figure out, okay, what do you want your seed series to look like? Are you doing a equity? Are you doing a convertible note, friends and family round? Are you doing a loan through your bank? Are you doing Kiva? Okay, once you've identified those strategies, then you'll prepare your assets for that raise. And then from there, if you're going out through the community versus alone, then you'll start to how you're doing it. But to be totally honest, we're really in our infancy on this, that we have a long way to go to truly establishing a community capital network for founders. I mean, I would love to see the day where a business could start and we could self-fund it locally. We're just not there yet. That we're using, for example, WeFunder, partial community investment, and then investors from around the country and around the world to come in and also help with the deal. So I would encourage people to look at Santa Cruz's Works page on what community investments are available. Brad and I are working on a page for iiED, and then people can certainly contact me on Sale Community Capital's website for what's available locally. But it's kind of like, it's a little bit finding a needle in a haystack right now. That definitely needs to be innovated on.
Okay. So you want to add anything, Jeff?
A thought there, yeah. So I think when we think about going to look for capital, there's kind of an underlying thing here that, unless you're just going directly to a bank or the SBDC, for example, but even this kind of plays into that. But the easiest way to find capital, which is the easiest way to find employees, which is the easiest way to do a lot of things, is to have a very large network, right? To grow your network. And so, I think that honestly, it all kind of begins with that. If you're building a company, you're thinking about a company in your head or in your house or on paper or, with a couple of friends, that's a way too small of a community. You have to start making connections now at all the different local events. I mean, there is a lot of work to be done, of course, but in many places across the country now, communities across the country, there are plenty of resources, including the SBDC, right, who's part of that community and puts on events in that community or helps puts on events in that community. Go to the event. Even if you're just a participant, you're not talking about your business, it's too early, you're not even thinking about it. Start making connections. Start talking to everybody that you possibly can across the community, because when it comes time to raise money is not the time that you go creating a network. You need to create the network before you go raise money, because the first time you ask somebody for money shouldn't be the first time that you meet them. So it's my only advice there.
That is really an excellent point. And I can say that there have been several people that are stopped by our table today during the breaks that have are thinking about, they have an idea, but they haven't put together their team, but they're making connections. And I encourage you, there's a whole bunch of people here today, connect with as many of them as you can, because as Jeff says, they may be helpful to you at some point in the future, and they may have some great ideas and some support that they can help you as you launch. Okay, so what are investors looking for from founders? Whether it's community or community investors or other types of investors, what are you seeing when you're working with entrepreneurs? What should founders be sure that they do?
I'll start off on this one. So we see, we see a lot on both sides at WeFunder, right? And this is a pretty good place to sort of understand this a bit. When you raise capital on through equity crowdfunding platforms, you are first bringing in your own community, and then to increase the momentum in the campaign, and then that equity crowdfunding platform's community jumps on board to participate in finishing out that round for you, right? It's kind of a bit of a social game there, but from what we see is that financials are a complicated thing. So it really depends on who you are, looking to raise capital from, right? So if we're talking about general human beings who aren't financial analysts and who don't invest in companies all day long, I would say that most folks are not looking at the financials in your business, right? Most folks are looking for a founder who looks confident, feels confident, and has a very strong idea, right? They're looking for a founder who has genuinely thought out an idea. The good stuff and the bad stuff, right? Is not keeping things hidden behind a door. They're telling the whole story up front. We all understand that nothing is a perfect story, right? And they're looking for something that they can participate in, that they believe in, that they want to see in the world, right? And so those three things really tend to be, I think, the main things that folks are looking for. And I think that oftentimes we see this even with individuals, like Trevor made a good point earlier. There's this catch-22 thing here where it's like even investors who look at the financials all day long, they're still often they're very apprehensive to be the first person to write that check. There's that whole story about, I've got 8 angel investors. They're all going to write me a $50,000 check. And then you ask one of them and they say, oh, no. Why don't you have so-and-so write the first check and then I'll be the second check, There's always going to be this social proof. It doesn't really matter which channel you're going through. But that's, I think, to sum that up, I think, if you can focus on those three things, being a strong, confident founder who's really thought through the good and the bad of the vision of the company, is going to get you where you want to go.
Trevor, do you want to add to that?
Yeah. So I think that definitely, as a lot of people will say when they're investing, especially in smaller startups or organizations or things that are simply just starting out, they're often betting on the founder, right? They can't really see a lot else, at that stage. So they're really saying, as Jeff was saying, what can I tell about this person? Are they confident? Do they have the qualities that I think are going to be successful, and do they have a vision, right? And that's, I think, oftentimes the biggest thing is how far can they take this thing? And the reason why is, I think, twofold. Number one, a vision often will determine the extent to which the founder is actually invested in what they're doing, because it means that they have a long-term view of where they can take this, and they can use that vision to sort of guide them through the tough times and guide them through potential pivots if the initial idea doesn't work out. The second thing, though, is that having that sense of vision is also going to tell the founders that is somebody who knows how to tell the funders that founder is someone who knows how to then communicate their vision to their audience and to their customer base to really capture their market. And that's a big part of it, right? Is the degree to which you can communicate what you're doing is also it gives you visibility into how well they're going to be able to approach their customer audience. So I think that those are really important things about the founder themselves. But then the other piece of it is that the investors are also going to look at the team. Not only does the team demonstrate the sort of overall set of skills that are at the business's disposal, but then the team unto itself is going to demonstrate to other investors that the founder or founders know how to build a team, because they also know that any business that's going to go far has to, number one, have a great team that's sort of getting them going. But number two, if any business is truly going to grow and scale, that also means they're going to need to know how to grow a team as well. And so I think that those are some of the things that investors are looking at when they're betting, knowing that they can't necessarily see, that's the whole concept, right? It's risk. It's not, they can already see that it's a shoo-in, but they're looking for, signs that it's going to be something that's going to be successful. And lastly, I think this goes to both team and founder, is an understanding of track record. And it doesn't necessarily have to be a track record within that particular business, but a track record for that founder or for that set of entrepreneurs that demonstrates that they are actually prepared to take on the task of growing a business and sort of meeting the benchmarks that they described.
Great. Are there any reasons, Hillary, that a founder shouldn't pitch for community capital?
Wow, she gave
That's a loaded question. Thanks for the curveball. And okay, so I guess let's look at this from a crowdfunding perspective. If you're an entrepreneur and you're not willing to pitch to your community, I would be really worried about your concept overall. Because keep in mind that whether your community is the local community or whatever communities you belong to across the country or around the world who may invest in you, kind of if we were to think of community capital on a global level, that if you're not willing to pitch to them and they're not willing to believe in you, then what's the point at the end of the day? I mean, to me, that would give me the heebie-jeebies right away. And then getting back to the question on due diligence as an investor, keep in mind that there's two forms of due diligence. One is at the community capital level and one's at the startup level. And what are the differences in between? For example, you're looking at a startup founder much different than you would look at a local restaurant entrepreneur in a lot of ways.
Okay, so let's just talk about that due diligence piece, Hillary. How would they do? What would they do differently between the two? Startup versus
let's right. So if you're scaling, so part of the issue, right, is if you're an entrepreneur, you may not have that initial experience. So looking at, okay, let's take a restaurant. What have you done to prepare for this? Are you out of culinary school? Who's on your team? Maybe this, I'm trying to phrase this in the best way possible. Yeah, I would look at it. I would look at it in a way, I guess you drip capital and in giving the entrepreneur with gusto, like for example, a young farmer, that's maybe a better example. Is that young farmer because maybe they don't have the experience, are they still worthy of investment? And maybe perhaps you as an investor can also be an advisor, for example. Anyway, I think about these issues a lot as we're talking about this due diligence process for it.
I mean, that was a really good point, Hillary. I mean, that pulls into, a piece that Trevor was talking about earlier, which is like, are you investing just for the capital return, right? Or are you investing also for the impact it has on the community as well?
Right. And it's also about, I think, something that Trevor said earlier, which is about establishing relationships and developing credibility in who you are and how prepared you are. And if you can't communicate those kinds of things and you can't back that up with details, that's part of the due diligence process, right? I mean, investors are looking to see if what you're saying is trustworthy and believable and likely to succeed and all of that, whether you're a startup or an existing business and looking for funding. If I walk up to you on the street and ask for a $25,000 loan and you've never met me before, the likelihood of your answer being yes is probably zero. And so I have to be able to convince you that I'm a good risk, right? That's true whether you're going after debt financing or you're going after a community capital investment or something from an angel investor. Okay, so
on that point, Cindy, you're I think this kind of Trevor touched on this, and I wanted to double down on it in a second. It's just as I think we talk about like creating a network now before you're ready to go raise capital is kind of a really good task that everyone can take on right now, depending on, never mind what stage you're in. But another one is a lot of us are not great at telling stories, and there is it's one of the most powerful tools that we can possibly have as an entrepreneur, frankly a human, is to be able to tell a really, really good story. And if we're making bets on humans as investors, which humans are things that run companies or that build companies, not the actual software, we need to be able to tell a really good story, no matter what where we're raising capital or how we're raising it.
So Hillary, you mentioned earlier, you've talked a lot about crowdfunding. Are there Are there any limitations on how much people can invest through crowdfunding? In other words, what can
So the limit.
founders expect?
So there's two types of investors. There's unaccredited, so you, me, Jeff, Trevor, etc. Then there is accredited investors that have $1 million of assets, not including their home. And so if you're unaccredited, everyone can invest in regulation crowdfunding, $2,200 per year, or 5% of their income, or their net worth, excuse me. And then accredited investors in crowdfunding offerings can invest as much as they would like.
And that's
So I'm sorry, go ahead, Jeff.
I was saying that's on a per year basis, right? So if you made $100,000 a year, you can invest $5,000, and then next year you can invest $5,000.
So as a funder, if you're looking for investors, you really need to think about how much money are you looking for and where's the right place to go to ask for that funds, right? Because some people can give you more than others, essentially is the reason I asked the question. Looks like we are coming close to the end of our time frame. Correct me if I'm wrong, Brad. Are there any pearls of wisdom that any of you would give to both investors who are thinking about getting involved in community capital investing and entrepreneurs? What 2 or 3 things would you say you absolutely need to consider if that's the route that you're planning on going?
Well, I've made the point about creating a network before, and if I'm from an entrepreneur side, I would say create a network and learn how to tell stories. And if you can build a great network and learn how to tell good stories, then I think you're on a pretty good path to success, as long as you're not just swindling people, of course, assuming you have a decent product. And then if I were from the investor side, I think, and this would probably come off as like, if there's a lawyer on the phone call or something, they're probably going to be like, this guy's crazy. But I would say don't overthink it, because in most cases, we're not actually dropping massive amounts of capital in this scenario. And what you're doing is not just putting money into an opportunity that will hopefully make you money someday, but you're making an impact in your community in something that you want to see in the world. And we spend our money on very, very dumb, wasteful things all day long. If you invested $250 or $500 or even $1,000 into a venture that you wanted to see happen, and you felt that you did good human-to-human diligence on somebody, just make the damn investment and move forward, because it's going to be a good thing in the world.
So it's investment with heart.
Yes.
Cool. All right. Thank you. Other pearls of wisdom that Trevor or Hillary would like to offer?
On the investor side, I would encourage everyone to move 1% of their portfolio from Wall Street to Main Street. And if that could be a local CDFI that we talked about, it could be direct investments through WeFunder, other startup platforms. It could be a direct note to an entrepreneur. I think that gets a little tricky. That's why we're using regulation crowdfunding, because it allows all investors to invest, often for a minimum of $50 to $100. So then that's number one. Number two, on the investor side, that taking lessons from angels, that we know to have success, you need to invest in about 40 companies. So think about spreading out your dollars. Never invest anything more than you can use, and really putting your heart into investing in as many as many businesses as you possibly can within your community. And then the third is really think about your due diligence between a venture startup and a community capital startup, and how that looks different. And think about, everybody talks about team and an experience. Well, what about the first-time barber, for example, or the first-time food truck person who really knows how to cook but may not have those credentials yet? That you're investing in them getting those credentials.
Thank you, Hillary. Trevor.
Yeah, so I would say that on the founder side, I often say this: capital is not validation. So if you are starting out a business, focus on really making that business concept something that truly is going to be compelling, such that it is validated by your market, by people who actually want that product or that service. And from there, once you've created that validation, you're going to have a much better time getting community capital or any form of capital for that matter. But you're also just going to feel better about it because you've already validated it for yourself. And investors know, kind of back to Jeff's point around confidence, people can tell if you don't have full confidence in what you're doing. And oftentimes, if you're seeking validation through capital, that can actually compromise your confidence. So I think that that's always a key thing to consider, is that you need to validate your product, your concept, through other ways beyond just capital first. The second piece that I would say for funders is similar. We find all sorts of silly ways to waste money all the time. And that's from people who have a lot of it to people who frankly have much less. And, both sides are, seen to waste money proportionately, in the same way, right? The haves and the have-nots, so to speak. So I think that if you see an opportunity to invest or provide money to something, just go ahead and try it. And you're not necessarily going to get that immediate return. It's not necessarily going to make you rich. But I think the bigger thing, whether you're at the crowdfunding level and you're sort of still dabbling in the idea of investing, or if you are an accredited investor, is it's just like anything else. It takes practice. It's like building a muscle. And the more and more that you do it, the more and more you actually start to do it in a way that's effective and is going to work for you. But you have to start somewhere. And your first investment is not going to be, necessarily a unicorn that is going to make you rich. It's almost the opposite, that you're only going to get there once you've done it so many times that you have the instincts to truly tell in a blink of an eye what is going to make for a promising long-term investment.
Fantastic thoughts from all three of you. Unfortunately, that's the end of our time for this panel session. I want to really thank you, Jeff, Hillary, and Trevor, for sharing your incredible insights for both investors and entrepreneurs when it comes to offering and raising community capital to launch and grow businesses. Great advice. We thank you so very much for this. There will be a short break while we set up the next session. As in the past, you will all be magically moved back to the lounge during this break. Take advantage of joining a table and creating those networks that our panelists highly recommended that you do. You may be able to use them very, very well in the future. So thanks again, and we look forward to seeing you in the next session.
Thank you very much.
Thank you.